So I've been making content, for the last couple of years. One, I'm doing it for fun. Two, I'm trying to, scale my businesses. And, at the end of the day, man, I want to educate. So, I feel like the best way to educate is through entertainment. So a lot of my content, it goes around through entertainment. I try to entertain people and, make sure that they're actually learning something through my content. You know what I'm saying? So, I'm going to be posting more game clips with my video content, just so that y'all can, have y'all attention span, helped out a little bit. You know what I'm saying? Because a lot of people have a short attention span. Oh yeah, air that shit out. Oh, I got fired up. Oh, but overall, today's video is going to be talking about spreads, margin, and major and minor currency. So, with that being said, what is a spread? It comes down to spreads in Forex. The spread is essentially just like the broker's cut, right? So, how you trade in the foreign exchange market, you have to invest your money into brokers. Those are the ones that allow you to have access to the markets to actually go and start making money. Brokers can be regulated and unregulated. I'm going to get into that in a future video. But for the sake of this video, just understand that brokers are where you deposit your money to actually go ahead and begin placing trades. Some brokers that you may have actually known about here over the last couple of years may be Robinhood, right? So with that being said, you have different brokers in the foreign exchange market to where you can actually exchange your currency and make a living, right? So with these brokers, they have to make their money, right? So spreads are essentially the broker's cut, and spreads are applied to every single currency pair that you're going to actually be trading. But the best spreads are going to come from the major currency pairs, right? Somebody trying to blow me up, shaking my head. Major currency pairs are your GBP USDs, USD Canadians, right? The most traded currencies that you can think of, the most volatile currencies, the most liquid currencies. Oh yeah, he's blowing up. Give me that, give me that, give me that. Come here, come here, come here, come here. Don't run, boy. Don't run from me, boy. Spreads are the scalper's worst nightmare. If you don't know what a scalper is, I'm an intraday trader. That means I like to take trades throughout the day. They might last a couple hours. They might, last a couple, it might last about a day or two. You know what I'm saying? That's a day trader, right? But then you got swing traders. It might take a couple of days. You know what I'm saying? It might take a week. It might take a month. You know what I'm saying? Those are swing traders. But scalpers, those are people that's entering and exiting the market within minutes. A lot of people like scalp trading because they like, things that happen quick. They like to see money being made fast. Scalpers' worst nightmare is the spread, because you might, take a trade that might be a high spread, and that high spread is essentially only high because you're trading on a small time frame. You might be trading in a 15-minute window time frame to where you're going to be getting in and out of trades. So that's going to be your worst nightmare when it comes to being a scalp trader. Bro, I do not see this guy. He got to be way up in the air. Like, he's slick. He way up in the air. But yeah, so with that being said, the majors, you got your minor currencies, you got your spreads. So how do this all play out to actually place in a trade, right? So we've talked about leverage in a previous video. Your spread, your leverage, and your margin is going to be key factors into what you need to take an account into when it comes to placing a trade. So if you're going to be placing a trade and you don't know anything about margin, you're not gonna be doing well when it comes to that margin. You know what I'm saying? You're not gonna be doing well when it comes to that trade because you don't understand margin. Margin is essentially like a down payment for every single trade that you're gonna be taking. So you might have, let's just say you have $100 in your account or $1,000 in your account. Let's say 1,000. So you got $1,000 in your account, and your margin is only allowing you to take a small trade, right? Oh, he's about to try to kill me. He's on it. Oh yeah, watch this, y'all, watch this. I'm about to jump into this tank. Oh, he done killed himself. Murder suspect. Watch this, I'm about to murder this guy, watch this. But, essentially your down payment for every single trade, because if you don't have any margin inside of your account, you're not gonna be able to place the trade. Margin comes from a percentage based on your leverage. As you go in a negative, as you start risking a little bit more, your margin starts to get smaller, right? As you place more trades, your margin gets smaller, right? So it's something called margin call. So whenever you're in margin call, that essentially means that the broker is starting to recognize that you're in a lot of trades that's not going to go your way. So they're going to begin to start closing you out of trades early, and clearing up that margin, give you more margin space to actually place these trades, right? Because if you don't have margin, you don't have any income to go ahead and place these trades, because like I said in my previous video that you have to go check out, margin is essentially all it's going to do is, oh, he blew himself up, and then, oh wow, oh yeah, I'm coming for you, boy. So margin is going to essentially allow you to take these trades with these brokers. Road to 1K. Appreciate you for watching this video. If you like this form of videos that I'm going to be breaking down more information when it comes to business, trading, and entrepreneurship, leave me a comment, leave me a subscribe. Road to 1K. We out.